Investors and traders, welcome to the channel Market Chart Pattern. Today is Friday the 13th, 2024. I hope everyone is having a good day. So we'll be taking a look at the key US markets. In this segment, I will be mainly focusing on the bonds and the US dollar and gold and silver. So this way we'll have more time to take a look at the key stock indices and the sectors in our Sunday video. So as always, this video is for educational purposes only, and it's not a financial advice. Some subscribers have asked me to do more educational content to explain more basics about the patterns and the pattern recognition that we discuss here. So I will be starting a series in which I will start from the very basics. So it will be coming soon. So give me some time to actually prepare the content, think about the structure, and then actually make the videos, and then I will upload those. So I think that will be a really good educational series for anyone watching the channel and who is interested in the kind of technical analysis that we do, which is based on pattern recognition, Fibonacci, retracements, expansions, retracements. So that will be coming up sometime soon. So it's gonna be a quick video because what we discussed in the last video and over the weekend, that has actually been transpired into the market place. We were looking for lower yields because of our pattern, this one, and the yields have actually moved lower, met our target, went beyond that. We have some structural support around here, so I think it's gonna take some time to resolve. I'm thinking when the FOMC meeting takes place, I think that's when the real fireworks will happen, and we'll actually begin to see the structural support coming back from 23rd of March 2023, whether the market will break that to the downside. If it does, because in my opinion the Fed really follows the 2-year yield, then it means that okay, maybe in the future Fed could actually be a little bit more aggressive in their rate cuts. But what it is telling us is right now the 2-year yield, the rate cut is coming. And let's now take a look at the 10-year. The 10-year one has been really interesting over the past 3 days because it's just been trading in a range bound formation. Longer term, here we go on the weekly chart. There is a pretty good chance that actually we are heading towards 116.30, so 117 almost, and then towards the 38.2% retracement, which comes around 118.21. So that's gonna be really important because just above that we have the 200-week moving average. So if the market is able to sustain above 38.2% retracement, that's really going to change the whole narrative which started from March of 2020, i.e. the bear market in bonds. So I think we are getting towards a moment, the moment of truth, which this 38.2% retracement will dictate for us, in my opinion. And then if we take a look at the long bond futures, is the weekly chart. This is actually the ABCD is higher in this one, 131, and we have the 133 being the structural resistance here. So I think we have lower yields coming at the longer end of the curve. The 30.2% retracement comes around 139, 140. So that's going to be the moment of truth for us in the long bond futures. Very similar pattern in TLT. Now the TLT is 20 plus year duration. So it will have those bonds which have the duration or the maturities from 20-year plus. And now what I'm not really sure of is because we have the 30-year bond, and we also have an ultra bond as well, and the difference between the ultra bond and the 30-year long bond futures is the duration. So for example, what I mean is we could have a bond which is of 30-year maturity, but it's only got for example 5 years left or 10 years left before it matures. So the ultra bond is a little bit different. It'll have more of the on the run securities, in my opinion. You can check the definition on the CMA website if you're interested. CBOT actually. Now let's take a look at the dollar. So there we go. So dollar 107 level has been a really key peak, and in 2024 we have not been able to actually take that peak out. We came pretty close here on the daily chart. We were actually able to call that the high in April, back in April, March, April, and now where the market is, in my opinion, we are actually going to probably test this gap here in this shaded region. Let me actually extend it a little bit. Here we go. So really it's sitting pretty much as support, or a training range rather, for the past 3 weeks now. So I think the market is kind of waiting for the Federal Reserve, the FOMC meeting, um, and then there is a chance that we could actually make an attack on the 99 level, which is really key. In my opinion, if the 99 level is broken to downside convincingly, then the US dollar could actually accelerate to the downside really quickly. However, the other thing is that because where it is got structural support, so we have seen some trading range behavior. Let me show that to you on the daily chart. Here we go, where the prices actually try to rally and then sellers come in. We are looking for 38.2% retracement with the possibility of 103, but the market remains weak. It's just, not even able to make 38.2% retracement. At the same time, it's not able to break the 100 mark as well. So just a trading range, which is quite frustrating if you are a currency trader. With that, let's take a look at the Euro USD. And here we go. So weak dollar, stronger euro. Um, we were actually looking for this market to get down to about 109.80 level. Excuse me. So that remains a possibility. If it does, then that's going to be 38.2% retracement. And we'll have this ABCD nice completed around here. Now, excuse me. Now, if we take a look at the GBP USD, it's stronger. It is stronger. It has done its 38.2% retracement, and also what it did was it did it in the ABCD fashion, and also there is 1.618 expansion of this little BC swing here. And then on Thursday, actually, it took the last Wednesday's high out as well. So that's shows strength in the GBP USD. I think if somebody wants to be short dollar and long another currency, not talking about gold here at the moment, then I think GBP USD is something which looks better in price action, looks stronger than the euro. So that's an interesting one. And then really important is to take a look at the Japanese yen. And the interesting thing is the Japanese yen has actually broken below the 5th of August lows, and I would have thought that actually that would bring some volatility in the stocks because of the carry trade, but that hasn't happened, and I think that's because the there is also some weakness in the USD as well overall. So that's interesting observation. Strong stocks are stronger, but the Japanese yen also became a little bit stronger as well. In fact, it also challenged and broke below the lows of December 2023. So I think the effect that was coming from the carry trade because of the yen getting this strong, I think the market is a little bit working differently now. Because what we have seen is with the CPI data coming in and PPI data coming in, the market has been strong. It looks like the market is not too much concerned about the inflation because of kind of the muted action we saw to the inflation data, but I think is more concerned about jobless claims and the job related data. I think that is moving the market a lot. Inflation data did as well, but I think the market kind of understands that inflation is coming under control because it's lagging data, and the trend is to the downside. And what is worrying more is whether the unemployment data is going to be rising, so the trend could begin to go to the upside, which means that the market would be really looking at Fed, how they're going to maneuver a soft landing or no landing scenario. So whether they're going to be aggressive in their cuts, if they're going to be overly aggressive, that might not be something which market likes. If they might be a little bit short on that, on the expectations, that might be something which the market might not like. So it's going to be really interesting to see the price action coming on during the FOMC, when the FOMC announcement comes out with the rate cut. Okay, so let's take a look at the Bitcoin, because Bitcoin has been a really interesting. Let me get my crypto. I believe I had this one, the bitmap. Yeah. So here we go. So the Bitcoin has been range bound overall since March of 2024, but it's also completing these ABCD patterns as well. In fact, since August, 5th of August is the where the low came in, and it's done a retest of it. This is about 78.6% retracement of this swing. And now today is a pretty good um, day for the Bitcoin. Not such a good day for the euro in comparison, or the Great British Pound, but the Bitcoin has been. You can just look at the size of the candle, really nice looking bullish candle. So that's good. Here it's just moving towards the middle of the trading range now. In my opinion, September is a really key month for Bitcoin. There's a chance the Bitcoin could actually end its trading range and make a new high. Then that means that, based on the Lucas spiral that we were looking at, September is, in my opinion, a key one. Otherwise, it could just remain more range bound for quite some time. So that is the possibility. It's not breaking down too badly at the moment, especially if it goes below this 50,000 level that we were talking about. Then it becomes more bearish. But I think it's just going to fluctuate in this trading range for quite some time, is what it's doing exactly. Now let's take a look at the gold market. So this is going to be the COMEX gold. This is the futures. This is not spot gold. So if you're watching the spot gold market, your price levels are going to be a little bit different. Um, but they will be doing something similar. Now here, it's moving slowly but surely to the upside, testing these channel, upper range of this channel. And just to show you, we have this 2700 as our target, where we have these really big ABCDs completing. And in my opinion, that could actually bring in some sort of a correction in this market. We'll have to wait and see, because the momentum is so strong, and the psychological level 3000 is just not far away. So that remains a possibility. But from a technical perspective, we're completing so many of these ABCDs here, that 2700 looks like to be a key level to be watching in the gold. Now there's something really interesting happened, and that was in the silver market. So this is the silver futures, COMEX silver. Now you can see the silver has been on a tear higher. It's actually performing stronger than gold, which is really nice, because this is something which we spoke about a few videos ago, maybe over the weekend video when we had a look at that, or the week before, that silver is also a commodity which is used as a base metal, which has more industrial use, whereas gold is mostly used as a, or considered as a precious metal. So because of that, a lot of investment goes into the gold. And not so much in the case of silver, but there are cases, there is a situation when the silver actually begins to outperform gold. And that also happens, in my opinion, when the market also begins to perceive this asset not only as a demand coming from the industry, but the aspect of a precious metal as well comes into the equation. And I believe this is what we are beginning to see now, because we had actually been looking at this entire price action going on since May as a trading range. So it had completed right at the 61.8% retracement, which was around here. And then it did a double bottom here, and also the 1.272 expansion of this little BC swing here. Not a perfect ABCD, but there is an ABCD of ABCD here. So it's going for the upper end of this trading range, with the possibility of 33.86 to 35.30 is where we have the expansions of this entire trading range coming at us. And also we have this black ABCD completing in between there. So this is the kind of target I think the market is working with. That is, in my opinion, all of it at the back of lower dollar. And if we just look at some of the stocks, which are silver stocks, such as Pan American Silver, you can see that we had a similar kind of trading range behavior. In fact, the stock was a little bit weaker. Now we are seeing strength in this one coming as well. So the target for this, I'm watching for this ABCD, which could see it to somewhere around 26.50. And then if we look at some of the other, let's say if we take a look at just the GDX, which is for gold, you can see that these commodities have also started to move higher, whereas they had gone into a bit of a trading range and they were just falling a little bit. So it's really interesting. I think the market is now pricing a Federal Reserve, which is actually pivoting on its policy of higher interest rates. And then I think the market might actually be based on the 2-year Treasury note. Might be looking at a Fed who might be actually quite aggressive in terms of cutting rates in their cycle, based on the economic data, especially the unemployment data. So we have started to see breaks coming into these commodity stocks, the commodities such as gold and silver. So it's really interesting. It's an indication of a weaker dollar. Let's also take a look at the copper. It's something that we don't do that much. So copper, because it's used a lot in the industry, had a big peak coming in May, and it's just been going down. It's interesting to see that what is the retracement that it has done. Now it's got this Eiffel Tower kind of a pattern, which I don't like at all. Um, yeah, so it came very close to 78.6%. So it's right in this ballpark figure. Let's see if it did an ABC. I don't think it has a perfect ABCD, but yeah, so it came pretty close, because the ABCD is also around this 78.6% retracement. So that's gonna be a pretty strong support level, and the chances are maybe it might have already done that. Um, so it's missed the exact levels by a little bit. So that's interesting. And if we take a look at platinum, these are the platinum futures. Here we go. So the platinum, you can also see that platinum, once upon a time, the platinum used to be a lot more expensive than gold, but not anymore. The gold is like roughly about 2.6 times more expensive than platinum. So there we go. That's a really interesting situation, how things change. So there has been a really nice break, the trend line break here, and I think yeah, this is also rising now. This is all an indication of lower dollar to come in, and maybe a few other things. So this is really interesting what is happening in the space of the metals now. So what it also means is that some of the stocks which are a more base metal related stocks, such as Rio Tinto. Yeah, so this is Rio Tinto, but this is an ADR. Let me actually bring the Rio Tinto on the London Stock Exchange. So there we go. I think Rio Tinto is likely to start performing better. It's in a big trading range here since September, bottoming, and you can see that it's also an ABCD. Here we go. So there we go. So yeah, we'll begin to see stocks like this, begin to perform, and then we have this FCX, which is the Freeport McMoran. You can see that there is double bottom, potential double bottom uh, price action here, and it had completed this big ABCD. I've not done a video on the gold stocks in a while, so I think this weekend I'll try to do that. After that, we just saw it just retrace. So I believe it looks like a 61.8% retracement. Here we go. Yeah, between that 61 and 78.6%. And let's see if the bottom around here might be a roughly a 50%. Yep, because of roughly 50% of this entire move from here to here. So really interesting. I think if once it gets above this swing high, then that's an ABCD moving higher. So we have got these kind of stocks actually started to move as well. Rio Tinto, Freeport, McMoran. Then there was also Camco. Camco. Okay, I can't remember the name of that. There is actually another stock. Can't remember the name of it. So thank you very much for watching the video. More educational content to be created and posted, and I'll update you guys. So thank you very much for watching my video. Have a fantastic weekend. If you like the technical analysis, what we do here at the channel, then please do subscribe to the channel, and if you do, hit that bell icon button. That way you will not miss on new videos when they're posted. And also, if you found this video of educational value, then give it a thumbs up. I will really appreciate that. Great. Speak to you guys soon. Have a fantastic weekend, and bye.